right, we'll get going. Hopefully, a few more folks will join us as we get going here. But thanks for joining us. Today is our monthly webinar, education webinar here at Paper Trail. Today, we're going to talk about remote employee compliance. Certainly, this has changed dramatically for the last couple of years as, since COVID has happened and everyone's gone working remote. Even in our business, we've seen a lot of folks moving to different states and so forth, which creates many challenges from a tax compliance perspective. So we'll run through some of these items. So on the agenda today, we're going to talk about the remote work trend. We're going to talk about some payroll and tax compliance items. What are residency and reciprocity agreements? Thinking about some HR concerns. And then we'll close out talking about employees who travel for work, not necessarily who are based elsewhere. So then we'll certainly have time for questions at the end. So certainly, as we know, this is the most recent data here. We've got about 22 million adults who are working from home all of the time, and that's a big trend, particularly in the last few years. So I think we're all seeing that. Even on our team, we have several remote workers who work fully remote now. Some of them work here in the state of Maine, and some work out of the state. So we're definitely seeing that. One of the big items is that folks will say that they will take a pay cut to be able to go work from home and work remotely. That's a big change in the industry. Certainly, we've seen wages on the rise the last several years as inflation's gone up. I think it's pretty telling to say that folks are willing to take a cut to go work from home, right? So that's pretty impressive as well. And then the estimate is that about 1 in 5 Americans will work remotely by 2025. And that, again, is certainly having ripple effects in the offices, real estate, culture, and innovation. There was an article yesterday that basically said many of the Fortune 500 companies are saying that their innovation has been stifled because they're not having the collaborative work environment anymore because so many people are working remotely. So certainly many benefits to working remote, but I think it's going to be interesting to see how things progress over the next several years. So we're going to talk about employees that live in other states and work remotely, right? So if your business is based in Maine and you have an employee working in another state, that's kind of what we're going to be talking about, or really in any state and working in other states. That's what we're going to talk about. So payroll taxes are based on where the employee is physically working, and not just payroll taxes, but also compliance and laws are based on where the employee is working, right? So there's a lot of things to think about in terms of a payroll tax and compliance perspective when you have employees working outside the state where your business is based, right? The first thing you have to figure out when you have an employee go into another state, that employee needs to be paying taxes in that state, and you as a business may need to be paying taxes in that state as well. So if there's unemployment taxes, you'll need to get those registered. You're going to need to get registered to transmit the income tax withholding to those states. And don't forget, you're going to want to make sure you talk to your workers' comp agent, your insurance agent, to make sure that you've got coverage in that state. So not all workers' comp companies will cover every state for varying different reasons. So, particularly here in Maine, MEMIC is the big workers' comp carrier. They don't cover all 50 states. I know this because I have employees that work in other states, and we had to change from MEMIC to another company because they don't cover all the states. So make sure you're talking to your insurance agent as well about those types of things. So we certainly know that when we talk about the taxes that you're paying, the withholding tax and employment tax, that is pretty easy and straightforward. But then you have to think about the local laws and compliance items that will come into effect. So certainly minimum wage varies across the country, right? The national minimum wage is $7.25 an hour, but only about half of the states, mostly down south, prescribe to that minimum wage. Almost every other state has its own minimum wage. We're seeing a new trend where cities and towns and counties and other entities are creating their own minimum wages. So there certainly are things to think about in terms of that. It's not just minimum wage. There's things like mandatory retirement, mandatory earned leave, paid family medical leave, right? That's coming across the country pretty fast. We are going to have paid family medical leave in Maine coming up next year. More to come on that for sure. But you have to think about all the different taxes that could be paid. Some jurisdictions have a local tax or a school district tax. So think about those as well. The other thing you want to consider when you have an employee in another state is your income tax, right? So if you are producing revenue in another state, that may create a nexus for you for income tax for your business or for you personally, depending on your entity structure, in those other states, right? So you may be subject to other state taxes, income taxes. Certainly talk to your CPA because that's going to be a consideration as well. So certainly, we talked about those. Depending on the way your entity is formed, if you're a pass-through entity or partnership or an S corp, that is going to potentially roll down onto you, right? So that's something to think about. And certainly, again, remember to talk to your CPA. Let's talk about residency and reciprocity agreements. So some states, unfortunately, not many in the Northeast, none in the Northeast actually, allow you to have reciprocity. So what that means is if you have an employee, if your business is based in one state and an employee works in another state, or they may move around, you don't have to file taxes in those states. So let's talk about an example. So Pennsylvania has an agreement with Indiana, Maryland, New Jersey, Ohio, Virginia, and West Virginia, usually bordering states, right? So if the employee works in Pennsylvania but lives in Pennsylvania but works in Maryland, they still only have to pay taxes in Pennsylvania. So there are states that allow you to not have to pay tax in those states based on a handshake agreement between those states. Unfortunately, it's mostly Midwestern states that have these. Not a lot of the Northeast states or really the East Coast states have these agreements. So certainly keep an eye out on that as well. Let's talk about some of the HR considerations. So this is probably the biggest headache, right? The payroll tax is easy. You register it, you pay it. You have great providers like us with softwares that help you track that. But the biggest problem is the HR considerations. And we are all small businesses, and we have a lot to consider in terms of everything we do. But when you put an employee in another state, those regulations and those laws now apply to your employee and your business. You have to look up what laws are applicable in those states. Things like earned paid leave requirements. Are there mandatory paid leave, mandatory retirement requirements? Some states require you to provide health coverage or varying degrees of that, disability coverage, things like that. Again, we talked about workers' comp. Make sure you've got coverage in that state. If your employee is injured in another state and they're not covered in that state, you could be on the hook for that liability. Pay frequency. So there are certain states that require you to pay on a certain frequency. We didn't overtime laws. California is notorious for an 8-hour overtime, right? So anytime an employee works over 8 hours in a day, you have to pay them overtime. It's not a 40-hour rule anymore. And some states have different rules about that. So some states are a combination, right? It could be if you go over 8 hours and over 40 hours, there's changes there. So certainly things to be considering in terms of those types of rules. Pay transparency laws. If you're posting jobs online, there are states that require you to post what the wage is or what the range is. And the same thing goes for your existing employees. You have to have a range, you have to have a salary range posted in many, many states. And that's coming across the country. So keep an eye on those. Certainly, there are some rules on employee monitoring and privacy. So those are things to think about. Certainly some of the more aggressive states are having items like this in place. And you have to make sure that if you're in a specialized industry, that you may have to transfer a license to a new state. Think about that. Or if there's licenses your business needs to be doing operating in those states, you may need to acquire those. So certainly lots of considerations in terms of that. Some states require you to reimburse employees for that remote work and the expenses that they incur while they're doing that, right? Are you providing them with a home office stipend or a reimbursement for their internet electricity? Again, I know California has these rules. You must reimburse them. From federal law perspective, you're only required to reimburse an employee for work that is directly related to that and may cause the employee's earnings to drop below minimum wage. So that's a consideration federally, but there are states that have requirements in that regard as well. So keep that in mind. Remember, there are differences between taxable and non-taxable reimbursements, right? So a taxable reimbursement is something like a health insurance stipend if you don't have a QSERA, or potentially a gym reimbursement. It's not a business-related item. A non-taxable item is something like office supplies or business travel. Those items can be non-taxable in payroll. We have a whole article and lots of information about that on our website, the difference between taxable and non-taxable reimbursements. Don't forget, while you have employees out in the field, right, you may want to know what you've given them, right? So track what you're giving them for tools. Many businesses will supply you with obviously a laptop, a phone, other types of office supplies, a monitor potentially, docking station, those kind of things. You want to keep track of that, right? Because when they leave, when they quit or you fire them, you want to make sure you get all that back, right? That's money. I mean, the average, I know what it costs. We just hired an employee. By the time I get everything set up and going, you're probably looking at $5,000 to $10,000 for a new employee just to walk out the door, and that's not training time and everything else. So when those employees leave, you want to get that information, those assets back. Okay? The other thing you really want to make sure is if you are allowing employees to work remotely, whether it's in the same state or not, you want to make sure you have a remote employee policy, right? Make sure you set the expectations for work hours, cybersecurity, privacy, data rights, all of those things, and make sure you update it when you go into different states. Because again, if you have an employee in one of those states that says you have to reimburse them for their internet or whatever, you need to put that in your policy. So be sure to pay attention to that. The other thing about this is, and we've seen this a lot, is we have clients whose employees may move to a different state and they don't tell their employer for 6 months until they get their W-2, and their W-2 doesn't have the taxes taken out in the new state. And they say, gosh, well, I owe taxes in my new state. And well, you didn't take taxes. Well, you didn't tell us. Make sure you require your employees to tell you if they're going to move, especially your remote employees, right? That is really, really important. Keep an eye on your employees. So let's talk about employees that travel to other states for work, right? So if you're in Maine and you go to Massachusetts for business, you have clients that you're going to see in Massachusetts, for example, or potentially you're going to go to a conference or something like that. There are special rules for those situations. So it is possible that employees who travel frequently for work could be required to pay income tax in those states. Certainly depends on the amount of time in that state and the money earned within that state. Every state has different laws, okay? So remember, you might want to look this up. If you have people traveling for work on a part-time basis, you may want to look at those states and see what the requirements are. So about half the states require employers to withhold tax from a non-resident who works in that state on the very first day they do business there, right? So if I'm going to Massachusetts one day, they may have to require income tax withholding on that very first day, okay? So things to think about as well. Other states have different thresholds, and we're going to talk about that in just a second. So here's just a sampling. 22 states require those taxes to be withheld on day one, right? So the second you step into Massachusetts or Vermont, New Jersey, Ohio, Rhode Island, and many others, you have to start keeping track of that. You want to make sure that you're segregating those wages appropriately so that if you have hours worked in one state and another, that they're being withheld properly. 17 other states require it after a certain period of time. So in Maine, for example, I believe it's 10 days in Maine. If you've been in Maine 10 days, you have to start withholding tax. So that's a consideration as well. So if someone just comes here for a day, you don't have to change anything. But if they're coming here for a period of time, you may have to start holding tax in that state. So, 12 days. Look at that. Gosh, I had my note in there and I didn't even read it. So it's 12 days in Maine. And if you earn more than $3,000. So certainly that's a consideration. Again, every state has something different that you need to keep track of. Lots of resources on our website. We have a full guide to this kind of stuff on the website under papertrails.com/resources. Don't forget, we have all the login help information that you need on the I Saw People Cloud or on our my HR stuff.com app. Don't forget to subscribe, rate, review, like our new podcast, Small Business, Big World. We talk about a lot of different business topics on there. And don't forget, our next webinar is Tuesday, the 21st of May. We're going to talk about onboarding and offboarding within iSolve. So lots of information to talk about there. So it's a pretty quick overview. But again, I would encourage you to take a look at our guide on the website. So if you go to papertrails.com, click on resources, and you can go to all of our e-guides and so forth. We have a full remote employee compliance guide, which covers a lot of the same information we just went over as well. And we're certainly happy to take any specific questions that you might have. And certainly you're welcome to reach out to us at any time to chat about. Get the chat open, I've got the Q&A open, and we'll just wait a second here to see if anybody hops on. Marie, if you have a question, you're certainly welcome to email us. My email is chris@papertrails.com. We certainly are happy to touch base with you after the fact. But certainly, with no other questions, we'll hop off, and we look forward to seeing you again next month. Bye now.